What is going on, everybody? This is Andrew from DeFiancy. So we decided to make a video this morning to talk about some of the things that are likely to transpire in the week ahead, really volatility in the markets. Also want to talk a little bit about DeFi and a cool little NFT project that I want people to put on their radar before everyone else does. But first, let's take a look at the Bitcoin chart here, and we're zoomed out on the daily, and as you can see, I have these wedges. They call these ascending wedges. I have these wedges drawn out here, and I want to show you guys something about this chart that is really showing you the bigger picture, at least in the short to medium term. If you notice on this chart, we really have been doing this same pattern dating back to really the beginning of the year in January. These are typically called bear flags. We've gone over this in the past, but there's one thing about this bear flag that has occurred each time that is, I'm not going to say concerning, okay, but it's kind of indicating potential downside over the next few weeks, okay? And that is what is called a deviation above the range high. So as you can see, we bounced around. This is back, in February. Bounce around. Boom. Everybody gets bullish. If you could go back here and look at your Twitter feed or just the general sentiment, people were really excited that things were going to reverse. And then boom, absolute carnage in the market, right? And this happened again. To a lesser extent, the deviation was smaller, but people really thought it was over, and then bam, oh, everything's back together, and then, bam. This definitely has a similar feel to it, and there's a reason why. And look, we can talk about TA and its, and its usefulness and all these good things, right? Hold on a second, let me turn my mic down. I think it's a little bit high right now. We can talk about all the usefulness of TA, right? But I believe that it's very good confluence with fundamentals, okay? And there are some things that are going to happen next week that when you combine, the reality of the things that will occur next week, we're going to go into that, it's earnings mainly, but when you combine that with the chart, you really are getting a pretty, I would say kind of an obvious picture, okay? So you see this chart here, it looks like it's kind of repeating past history. Let's just say that this does happen, right? And look, it can reverse, it can bounce off here and and come back up to around this level or higher. I'm not saying that's not going to happen, guys, but let's just assume that this is going to break to the downside. I think at that point you probably get at the least a retest of this 17 to 18K level, or maybe lower. All right. Now, let's go into why I think this could occur from a fundamental standpoint outside of the charts. So this is a guy on Twitter. He's sorry, my page is reloading for some reason. This is the guy on Twitter, Bear Spawn Crypto. He's actually pretty controversial. A lot of people don't like a lot of his content. Sorry about that. Here he goes. But he posted this, so I'm gonna give him credit for it. So he's saying holy week of earnings can be brutal or can be relieving, nasty volatile week incoming. I think that really sums this up very well. This could be good or bad, but because I'm seeing the chart in that way that we just saw, I believe that people are preparing for the downside, and a lot of times these market movers are very good with getting information that's accurate, and they will place bets well before the public. And we saw the same thing. Let me go back, actually. We saw the same thing up here. We actually started to have a lot of absorption before these massive downturns, and I really do believe there's some people that have, look, it's not insider trading, okay, but it's just they have a lot of people looking at this information, and they are pretty sure that something's going to happen. In the case of these two moves down, it was CPI related, I believe. I know that this one was. And for this one, I think it's going, if we do break to the downside, I believe it's going to be earnings. Okay. So you have all these earnings, okay, all these ginormous companies that are fixing to show the world how well they've been doing. And a lot of people have looked at this chart here. I'm going to remove some of these lines here, and they've said, well, it just looks like we're bottomed out, right? So if you go to equities, and this is really the important thing here, a lot of people just assume that like there's just nothing else that can make the market upset, right? I disagree. And I think earnings is really the next wave of catalyst to bring you down if we do break down, okay? Because I do believe that inflation, the CPI stuff, has been priced in for the most part. But what has not been priced in my opinion, is earnings. Now, I'm sure there's some people that are, they've hedged and they know that they're probably not going to be great. But if they are pretty bad, I do believe that you really do get a pretty big shock to the system, and you will end up touching in this range here. So roughly 3,400 for the ES, which is the S&P 500 futures contract. And that actually really fits well with the 200 week moving average. I'm not going to pull it up, but it's about right here as well. That would make a lot of sense to me. And I'm not saying this would be the bottom, but I do believe that I think it's very likely that this happens, or at the least, if there is bad earnings, you get a retest of this level here, the local bottom right now, which is like 36.5 roughly. Okay, so be prepared for potential volatility. This is why I was saying in the last video, like, you don't want to buy Bitcoin or ETH, especially ETH, to be honest, because it's overextended even more at these levels here, guys. I mean, it just doesn't make sense from a risk reward standpoint when you have these earnings. And to be frank, or to be fair, as Hellspawn pointed out here, they could be good. Okay, they could be good. Like if these earnings are good, you're going to get a pretty significant bounce, because there are people that are preparing for the downside already. And I think that's why you're getting some really strong selling. I mean, I've been looking at the order flow. There's been a lot of really strong selling. I mean, I don't want to focus too much on the data here, but the more I show you guys this, maybe it'll make more sense. But this is what's called CVD. So this is like sellers in the market here. Notice this Binance spot, and especially FTX spot down here, a lot of selling. When you see really heavy spot selling at the top of a range, or the top of above the range, when we already think it's a deviation, you're really getting a strong signal that people are preparing for downside. And a lot of times they're right. Okay. So it's just something to be aware of. If you're holding bags right now here at the top, especially on ETH, and I'm not calling it the top, but you get what I'm saying, up here. I mean, look at ETH here. It could be a pretty significant pullback, guys. I mean, for ETH, you're looking at, and ETH, by the way, if we do bounce, or if we get any kind of relief, or things are great, it's going to move harder than Bitcoin in the up direction because of this narrative. But there's a lot of leveraged people right now in this play. Okay. And I'm getting a tool out to show you how much downside potential there really could be here. I mean, just to the bottom of the range, you're looking at 34%, or roughly 30%, guys. I mean, that's not really good risk reward, in my opinion, like buying here, to be honest. So be careful there, in my opinion. Not financial advice, but I think that one's kind of fairly obvious. Let's look at the DeFi Pulse Index, basically where we left off in the last video. I want to show you guys more and more of these tokens that we call the DeFi primitives. Okay, we've talked about Maker in the past. We talk about Aave a lot because we really like Aave. I use Aave more than any other app, maybe minus Uniswap. But Curve is also one of these apps that actually really need some attention focused on it, because Curve is basically a decentralized Forex. So what is Forex? And by the way, I'm showing you this curve. It's curve chart here that looks very ugly. I think something has happened, but I'm going to show you this anyway. Basically, Curve is a decentralized Forex. Forex is, in the traditional markets, is how you exchange foreign currencies. So if I want to go from like USD to like the Canadian currency or the euro or whatever, you use a foreign exchange, right? And Curve is basically that in DeFi. So you can go from, right now it's mainly used from going from one stable coin to the next. So Uniswap is actually not all that great at going from like USDC to USDT, believe it or not. Like if you actually look at, there's an arbitrage there. Like even though it's a small difference, like let's say, you lose like a few cents, that's actually a lot. Well, actually it's not a few cents, but let's say you lost like half a cent going from USDT to USDC. Well, if you sent over $1 million, that's a really big loss, right? So a lot of people will use, so Curve basically optimizes going from like assets, okay? And it's also, I think it's going to scale and be used for more than that, but it is heavily, heavily, heavily used in DeFi. Like a lot of the yield that you see is built on top of Curve in some way. Curve in many ways is like the backbone of DeFi yield, okay? So this is one that, look, in terms of its value case as an asset, it is a governance token. There are other incentives built within it. I'm not saying that this is I'm not saying that this is anything like Bitcoin or Ethereum. Think of this as a tech stock, really. More like a tech stock, okay? Whereas Ethereum and Bitcoin are just in a different category. But I think this is an undervalued token in the long run, and by a long shot. I believe Curve, you're looking at it right now, it's got $4.9 billion locked in its protocol. Okay, well, what is its market cap? So it's got $5 billion in its, assets under management, basically. Well, what is its market cap, right? Its market cap is $500 million. And you see the market cap to TVL ratio. I really believe that this is extremely undervalued in the long term. Now, I believe it can go lower. Right now it's actually down negative 90%. It might end up being negative 98% or negative 95%. But in the long run, I believe this will be much higher, much, much higher in the future, along with many of these other apps. I'm extremely bullish on pretty much all of these in the top, most of these, Compound, Balancer, Aave. I'm more bullish on a few of those like Aave, Maker, Curve. I am bullish on Uniswap, but I do have a bone to pick with them in some ways. But another one I want to show you, and this is probably my favorite app right now it's built on Ethereum. This will be transitioning over to the Cosmos ecosystem, but is DYDX. And DYDX actually, I thought I had this pulled up. I need to pull this up because this is a game changer here. I believe DYDX is positioning itself to be a major, it already is a major player in DeFi. Guys, my computer is slow because it's a little bit old. I need to get a new one. So I apologize that this is taking so long, but this is something I want to show you. So at DeFiancy, we do a lot of trading. We have a proprietary trading firm. And so this is huge for us. Like the fact that you can now have stop losses and take profits. If you're not a trader, you probably don't know what that means. But there's a reason why some people like myself didn't trade on DYDX. And it was because you couldn't use a lot of the functionality that you would use on a traditional exchange. This is a game changer because DYDX is basically getting to slowly but surely getting as user-friendly and having the functionality of a centralized exchange. Well, if it gets basically on par with them, which is getting close, it will win over it will have an enormous pull or you'll see an enormous exodus out of, I think, a lot of centralized exchanges because think about it. The risk reward of using DYDX versus another one is with the exception of maybe something like FTX, Like, they can't take your funds. They can't lose your funds unless there's a smart contract hacked. So that is something to consider. But you hold your crypto. You have your own private keys. It is decentralized. At least right now, the smart contracts are decentralized. The actual off-chain order book will become decentralized in another upgrade. I think they're version 4. But anyway, what I'm trying to say is, like, the fact that they are progressing the way, like, at the speed that they are, DYDX, I'm expecting this to be a massive protocol, much bigger, orders of magnitude bigger than it is now. I mean, it will be like, it'll be like FTX in the future, I think, or bigger. Okay. And I'm not saying that it's going to replace centralized exchanges. That's not what I'm saying. But what I am saying is there is going to be a lot of people who will prefer to trade on a platform that is permissionless, okay, where they don't have to worry about, not being able to get their funds out. So I'm really excited about DYDX. So this is a DeFi primitive right here. It is by far and away the largest and most used derivatives platform. I mean, it actually is, it's one of the largest protocols used in general. And it's extremely undervalued if you think about, if I'm right, if it becomes this large protocol, much larger than it is now in the future, this will be a very good time to DCA in. But I will say this, it is, let me go to let's look at like some of the numbers on it. It is one of these protocols that is, it has a lot of incentives. So you have a lot of selling, basically, meaning if you trade on their platform, they pay you based on the amount of time you've held a position times the amount of fees that you have actually accumulated. They give you rewards every month, and that's a great thing if you're trading, right? But think about it, that does cause selling pressure. So what I'm saying is that they're releasing a lot of tokens into the circulating supply. So there's going to be a lot of selling pressure over time. But if you look at this, it's already down 92% from its all-time high. Its fully diluted market cap right now is $2 billion. So it's still, it's still about 10 times. The market cap is about 10 times smaller than its fully diluted valuation. So you could see, obviously, some more downside. But in the long run, I believe this will be much higher in valuation. Okay, not financial advice, obviously. But these type of assets here that have real use case, that people have a reason to use them, okay, like Aave, DYDX, Curve, okay, DopeX, we talked about that last time. These are going to be the, I don't want to say 100x, but that's kind of like the, we use that term a lot, 100x opportunity, but we'll just say the big opportunities of the next run are going to be these ones that have obvious value, fundamentals that people want to get in, okay? Because of the fundamentals. You don't have to guess why you should buy it. You just know that, it's like Amazon or like Facebook or something. Like, why would you buy Amazon stock? Well, a lot of people use it, right? It has value, it has revenue, right? So anyway, really think that people need to start looking at some of these DeFi protocols while they're extremely oversold. And maybe not extremely oversold. I mean, they were extremely overbought. So they're getting back down to value is what I'm saying. And we're going to talk more and more about these. But I think this is all I really want to talk about in this video. We'll go into some, I want to make a whole separate, really, we're probably going to make a separate video or some kind of like document outlining like how to profit from the merge. And not just by buying ETH, but by positioning yourself and learning more about some of these protocols. So stay tuned for that. But until then, happy hunting, friends.